2025 pension alert, new DWP bank rules could delay payments if you don't act fast. Protect income now. Imagine waking up in 2025 expecting your pension to arrive as usual, only to find nothing in your account because of new DWP rules you never even knew existed. For millions of UK pensioners and seniors, this isn't just a possibility, it's a looming reality. The government is changing how pensions are paid, and unless you act now, your lifeline income could be delayed or even frozen. These updates aren't minor, they are major banking rule changes that could directly affect how you receive the money you've worked your whole life for. This video will uncover everything you need to know before it's too late. Crucial updates are unfolding for pensioners in 2025, and the changes coming from the Department for Work and Pensions are not small adjustments. They are sweeping reforms that every pensioner, every family member of a retiree, and anyone relying on the state pension must take seriously. For decades, pension payments have been a steady system, arriving in the same way month after month, offering a sense of stability to those who depend on them. But now, new banking rules and updated requirements are being introduced to reshape how these payments are handled, and failing to act in time could mean missed payments, delays, and unnecessary stress. These changes are designed to improve the overall system, but to benefit from them, pensioners must prepare and understand exactly what is happening. At the very heart of these reforms is a new requirement for pensioners to have a valid individual bank account that complies with updated standards. This is not just a matter of preference, it is a rule that will determine whether or not your pension money arrives smoothly and on time. The government wants to ensure that payments are more secure, more transparent, and less likely to fall into the wrong hands. If your current account does not meet the criteria, your pension could be interrupted. That's why taking steps now is crucial, rather than waiting until problems arise in 2025 when the rules officially take effect. Imagine relying on your monthly pension to cover essentials such as rent, food, and bills, only to face a delay because your account did not qualify under the new system. That situation can be avoided, but only with preparation. For years, many pensioners have relied on joint accounts with spouses, business-related accounts, or specialized accounts for managing disability benefits. While this has worked in the past, starting in 2025, the rules are stricter. Pensions must be directed to accounts that are clearly in the name of the individual pensioner, making it easier for the DWP to verify ownership and prevent fraud. This means that if you currently share a joint account, you may need to open a new account specifically in your own name. Although it may feel like an inconvenience, this requirement is not about creating hurdles. It is about ensuring that the system is robust and payments are secure. Banks will also be expected to implement stronger identification and verification systems, which means your personal details must be accurate and up to date. Another aspect of the reforms involves the DWP's new approach to communication. In the past, if there was a problem with your account, it could often take time to resolve, leaving pensioners uncertain about when or how their payments would arrive. Beginning in 2025, the DWP is promising a more proactive approach. If an issue arises, whether it's an error in your bank details, outdated contact information, or complications with identification, you will be directly notified. But this will only work if your personal details are kept current. If you have moved to a new address, changed your phone number, or updated your email, make sure those details are shared with the DWP so you can be reached without delay. A missed letter, an outdated phone number, or an inactive email could mean you miss urgent information that directly affects your pension payments. It is also important to recognize that these new rules may not stop with pensions alone. Other government benefits such as housing assistance, universal credit, disability allowances, and welfare support could also be impacted by the same banking requirements. Many pensioners rely on more than one type of government support, so ensuring that all your payments are compliant with the new standards is essential. Overlooking this step could mean disruptions across multiple benefits, not just your pension. Why is the government implementing these changes now, after so many years of keeping the system largely the same? The answer is efficiency, security, and modernization. The old system, while familiar, left gaps for errors, fraud, and delays. By tightening requirements and ensuring accounts meet higher security standards, the DWP is aiming to reduce mistakes, speed up payments, and eliminate fraud. These improvements are designed to give pensioners peace of mind and create a system that works better for everyone involved. Yes, it may require effort to adjust, but the long-term benefits include a system that is more reliable, faster, and safer. So what should you be doing right now? The very first step is to check with your bank to confirm whether your account qualifies under the new DWP standards. Most banks are already aware of the changes and can guide you through the process. If your account is not compliant, do not panic. Banks can usually help you open a new personal account with ease, and many offer free services to make the transition smooth. The sooner you act, the less stressful this process will be. Waiting until the last minute could mean standing in long queues, dealing with overwhelmed bank staff, or worse, experiencing disruptions in your pension payments. In addition to your banking arrangements, double-check your contact information with the DWP. Make sure your records are up to date so that if they need to reach you about a problem, they can do so immediately. Too many pensioners overlook this simple step only to find themselves cut off from critical updates because the department was trying to contact them at an outdated address or phone number. Taking a few minutes to confirm your details could save you from weeks of uncertainty or missed payments. It is also worth noting that the DWP is preparing for emergencies in a more structured way. In the past, disruptions such as postal strikes or technical failures could delay pension payments with little recourse for pensioners. From 2025, the system is expected to have new backup processes to ensure that payments are delivered more reliably, even during times of crisis. This reflects a larger effort to make the system not only more secure, but also more resilient against unexpected challenges. Pensioners should take comfort in knowing that these measures are being introduced to protect them, even in difficult circumstances. As we move closer to the 2025 deadline, the most important thing pensioners can do is act now. Update your bank account if necessary, ensure your personal details are current, and stay informed about the changes. The earlier you prepare, the smoother the transition will be, and the less likely you are to face interruptions in your pension income. This is not something to postpone, because your pension is too important to risk. If at any point you feel overwhelmed by these changes, remember that help is available. The DWP has staff who can answer questions and guide you step by step, while banks themselves are prepared to assist with setting up compliant accounts. You are not alone in this process, and thousands of pensioners across the country are going through the same adjustments. Seeking advice or assistance is not a sign of weakness, it is a smart move to protect your income. Your pension represents years of hard work, contributions, and planning for the future. It is the foundation of your retirement and deserves to be safeguarded. By taking the necessary steps now, you are protecting not just your monthly payments, but your peace of mind. These reforms may feel daunting, but in the long run, they are designed to benefit pensioners by making the system more reliable and efficient. Prepare now, act decisively, and you will step into 2025 with confidence, knowing that your pension will continue to arrive on time every time without unnecessary stress or disruption. Think about the countless pensioners who have relied on the same system for decades without giving it a second thought. For many, their pension arriving each month is like clockwork, a lifeline they never expect to change. But now, with the 2025 rules coming into effect, even those who have always felt secure must pay attention. Imagine a retiree who has used a joint account with their spouse for 30 years suddenly being told that this account no longer qualifies. It's not about losing access to their money, but about having to take extra steps, open a new account, and adjust habits that have been ingrained for years. This shift can feel intimidating, but it's a necessary step to ensure their pension continues without disruption. The real key lies in preparation. Those who act now by updating their bank accounts, confirming their contact details, and staying informed will find the transition smooth and worry-free. Those who ignore the changes or assume they do not apply to them may face unnecessary stress when the rules are enforced. The message is simple: be proactive, not reactive. By taking a few careful steps today, pensioners can safeguard their future, avoid disruption, and step confidently into 2025 knowing their pension is secure.